Hey everybody, welcome. Thanks for joining us today. And this is all about trading with a smaller account. We're not going to focus exclusively on just futures or just Forex. We had a presentation here just recently where we focused just on futures, and of course on Thursday we'll be focusing just on Forex. So this is more to do with account size overall. Usual disclaimers that we bring up here every time, mostly just to really focus on the risk side. Make sure you guys understand this. I'm sure you do. You're all shaking your heads. You understand this. But in particular, it's really important when your account is smaller. What's really important on a smaller account is the risk side of it. Like I was mentioning, it's very easy to get into trouble very quickly. So you guys have to be particularly careful, probably more so than somebody with a little larger account. You can get into trouble with even a larger account, but there's probably less margin for error overall. So keep that in mind. So the focus today will be, of course, on small account. Troy's going to give you a really great in-depth live in the market. I mean, I realize it's a little bit later in the day, but he'll be able to cover just what some of the better markets are for smaller accounts and how they did today and recently. And then we're going to talk about enrolling in the Premier Trader University, which is getting pretty close to capacity at this point. So we'll have all the information on that. Won't spend a lot of time on history. You probably don't want to hear my life story or Troy's or Brian's, but just so you guys know, if you are new to us, we've been at this for a long time, since 1996. We all trade live in the markets. I have trades going right now on the swing trading side, and we've been working with active individual traders for 18 years. So we have people in just about every country that you can imagine. The coaching team here, and we're actually joined here live. Troy's here, of course. Will and Ron is also, they're both working in the background, answering your questions. So feel free to interact with them, ask them questions anytime as we go along. I like to kind of start with sort of this, making sure that this is clear, because sometimes people feel if they have a smaller account that things are just have to be completely different. And they're really not. Even if you have a smaller account, you eventually will have the opportunity to scale. And Brian, in a few minutes, will show you one way that you can actually work with what's going to seem to be a very small average daily winning amount, and how that will let you build up your account over time. But really what you have to have are all these criteria. I think if you're missing any of these, you probably will not be able to succeed. These are very important, and it is one of those things that strike one on any of these, and it's just you're not going to end up with the right bottom line. So number one, if you're having any struggles for success, you should ask yourself, am I doing all this? Do I have the ability to do all this? If not, that's going to be a problem, but I think we've got a perfect solution for all of you today. We really have combined the training with the systems, with the trade plans to take care of all this for you. All right, so we have something that I call WYRWYT, right? That's really easy, but it's sort of a take off on those of us who are older and know WYRWYT, which is was always what you see is what you get, or WYSIWYG, I should say. So this is what you risk is what you trade. And what's really important about this is people a lot of times ask us, hey, what markets should I be trading? Can I be trading the DAX futures? You guys were saying that thing can make, $2,000 in a week. That's what I want to trade with my $2,000 account. Well, yeah, that's awesome, and that's 100% return, but that would be very foolish trading. So I really need you to think in terms of what size is your account, what is the max risk that you are comfortable with, and also what's a max risk that's reasonable, because you will have losing trades, and I wish I could tell you you'll never put together consecutive losses, but none of you are at this webinar tonight because you want to hear me sell you a falsehood or non-truth or just give you a lot of hype. That's not what you're here for. You want reality. So we have to prepare for the fact that, yeah, we're going to have the odds in our favor. And when you see what Troy's going to show you, things are good. The plans we have are good. They're profitable. They're successful. But we need to plan for the downside. And that's even more important than the good stuff. The good stuff will take care of itself. So we would like typically for you guys to risk 2% or less. And as your account gets bigger, get to be 1% or less. But we realize when you have a smaller account, it can sometimes be a little limiting. You have to probably be a little bigger risk taker. Seems contrary to what it should be, right? But that's the way you really have to be. As your account gets bigger, you want to take smaller and smaller risk. So you can see here what the average amount of dollars you can risk per trade is based upon, some basic percentages. And 5%, I can tell you, is super aggressive. And I know for a fact that the bulk of you have used even much larger risk than that. You probably have used 10%, 20%, 30% without even realizing it because you've tried to use max leverage with your Forex broker or your futures broker. So this is very important. You need to be thinking right now, okay, my account was whatever you answered before. Multiply that by 2%, 3%, 5%. That's going to basically give you your more conservative, safer range up to the max range you could possibly do. So I'd actually like you to do that now if you can, because as I go through the different markets, you're going to be able to focus in on which set of markets are probably going to be best for you overall based on whatever this is. So go ahead and do that 2% to 5%, and then you know that that's your overall range. So if you ended up with $100 to $250 of max risk per trade, these are some of the markets that potentially you may want to consider on the futures side of it. And we're big fans of day trading futures, but at this level, you can't just choose any futures market, even if your broker would let you trade gold or silver or the S&P even. It's not a good idea. The better markets are going to be the Dow Mini, heating oil. I'm going to also probably say in here soybeans. Eurobond doesn't have a lot of volatility. It can be traded in the European session, so it's certainly one to consider, and the risk is very controllable. And the NASDAQ E-mini may be one to consider as well. The Euro FX futures, we just don't get the volatility like we used to this year. I mean, this could change. It's probably not going to be high on my radar. It would not be my first choice in this list. I would probably focus in on the Dow E-mini or heating oil. If you are willing to risk on the high end, maybe you can consider the crude oil and Russell E-mini, but realize that those are going to be on the higher risk per trade, the 250 range, so be careful on that. Don't be taken in by any of the other markets that I list here. On Forex, we're going to mostly focus in on day trading on the Euro Yen. Here this year, 2014, that's where the most dependable intraday volatility has been, not in the Euro US dollar. I'm not going to say that it can't be traded, but man, the ranges are so awful on the Euro US intraday. I mean, back when we were used to 100 to 150 pips per day, I mean, it's not unusual for it to be 20 to 40 pips per day. It's just so minimal. It's just so incredibly boring at times that you may need to go where spread's still great, but there's just more intraday volatility. Swing trading, 1 to 2 mini pairs max, and you're going to want to spread it out a little bit if you can. And same thing, Euro US probably not going to be super high on my radar. We're going to probably go to more of the alternate pairs overall, and just don't be taken in by trading standard size. I know you can put $1,000 in your account and they'll let you trade 100 to 1 leverage, or even in the US 50 to 1. That's way too much leverage. Don't forget about what the broker will let you trade. You need to forget all that. You need to go back to the calculation and let your risk per trade determine what you should trade. If you're going to be on the stock side, you're really not going to get involved in any day trading. It's going to be very difficult to get involved in much on the way of stock trading, but you could, at this high end, do options trading, and we're talking one options contract at a time. All right. Now, if we're going to be at that next level down, the $50 to $125, you're really primarily going to need to look at the Dow Mini, heating oil, maybe soybeans, maybe NASDAQ, and then stay away virtually from everything else, because it's going to be hard to only risk 1 point on the Russell and take the trades as they set up. The S&P, we can talk about that later, why we have issues with it, but certainly things like the DAX, gold, silver, not going to happen. You're not going to have enough risk to stay in trades long enough. On Forex, you got to really pare yourself down to minis, and if you're going to swing trade, you got to go down to micros most likely. Maybe you can get by with 1 mini, but you're really going to more than likely need to go down to micro, and you need to forget about stock and options trading in this level. So you see how your size risk will dictate where to start. You only need one good plan, one good market, so don't get too worried about that. But just realize as you go down the scale here, when you get down to $20 to $50 risk max, you can't trade futures. You can't trade options. You only should focus on day trading 1 mini pair. That's it. I don't care what your broker will let you do. And absolutely get it down to micro size on swing trading. And for those of you at the lower end here, right, the smallest accounts and the smallest risk, you're just going to need to lean on time. you're going to need to realize it's going to take you longer to build up an account, but you will absolutely be able to add to your position, and eventually the power of compounding is going to take over and really help you out. Brian, I want to hand it off to you right now. Let's just make that point. I know we don't have tons of time, but it's probably important here to at least give that example. And again, I'm not really sure. Oh, I'll hand it off to this one. So the Brian Short, if you can just make that example.
Yep, you got it. All right, great. Thanks, Mark. And what I want to do is spend just a few minutes here showing you a very powerful concept and a couple of key points inside that concept. Before I get to that, I want to get your attention. And I'm going to get it by sharing an experience I had just today with one of our PTU members who shared with me his success. And his success was a part of the thing that I'm going to show you here in a moment. And he scaled his position size in a manner that got him to a point where he's trading very successfully. This individual's made $70,000 since the first of the year, trading 3 markets. He's currently trading 3 contracts on each one of those markets. And he's using the concept that I'm going to show you right now. So hopefully I've got your attention, and I'm going to go through the 3 key points here that I want to convey to you today. First of all, number 1, it's important to pay yourself as a trader. And Brian, you might say, Brian, that's kind of a no-brainer. That's what I want to do. But more importantly than that, it's when you pay yourself. Too many traders want to pay themselves immediately. I'm going to show you in a moment the proper timing in that. Number 2, Mark's made the point already, keep your risk at 1 to 3%. If you go above that, I guarantee you're going to set yourself up for failure. So we're going to drive that point home here in a moment. And number 3, and this is the concept that the member I talked about today used, earn the right to trade additional contracts. Okay, and I'm going to show you what I mean more about that here in a moment. Now, if you want to download this spreadsheet, you can do so. The link is right there on the screen. It's www.netpix.com/PTUCP.XLS, and make sure you capitalize this here at the end. And also, it's going to open up a worksheet. So you have to have Excel on your computer for this to work, and then you should be good to go. So let me just pop over to the worksheet itself, and I want to explain a few things on the worksheet, how this works. So again, we're talking about a small account today. So with a small account, we're going to assume that we're going to start with a relatively low balance here, $2,500. So that's what I put into the worksheet on this particular example. The small accounts are going to, on an average basis, have a smaller income per day. So I've set the trading income at $25 average per day. Now what that means is there'll be days you might make a little more than that. There'll be days when you're going to be negative, but the average over the long haul is $25. Maximum number of contracts to trade. How many contracts are we going to trade on this market before we cap it off? In this case, I've set that to 10. The average maximum risk per trade, I've set at $50. And look at this. Remember we talked about the risk per trade? I've set it at 2.5 in this scenario, keeping it well below that maximum 3%. Now the next 4 fields are all about how we pay ourselves and when we do so. So the first line item here is $1,000. That's what we're going to pay ourselves at X point in time. When our account grows to $20,000, and then for every $5,000 after that, we're going to pay ourselves an additional $1,000 up to a maximum of $10,000. Now this is a small account. In a moment you're going to see that we don't get to that level, but I've got some other advice for you once you grow your account to a certain size. So again, those are the inputs. You can play with those as you see fit. And I want to scroll down here and just kind of show you the bottom part, the power of this spreadsheet. And let me give credit where credit is due here. Will, who is on the call today answering your questions, is our resident guru programmer. He's the individual that developed this worksheet, so he gets the credit for it. This section here is some expenses. You can put whatever expenses you want to in there. I've got $95 for the month there, and you can see our trading income for the first month is $500 with a net income of $405. And hold on one moment. Okay. So here is the power of this worksheet. And first of all, I want to point out the very bottom line here is the risk per trade. Notice we're staying well below that 3%. In fact, on the second month, we're at 1.7 and 1.5. Notice the risk goes down until we earn the right. Remember I talked about earning the right to go to the second contract. In month 5, we get to go to number 2. All right? And then in August, month 8, we get to go to 3 and 4 and so forth. Notice how this escalates even faster as we go out into time. Too many traders want to escalate this after having success in the very beginning. But you can see here, to stay within that risk per trade formula that we've outlined for you, you've got to do it in this fashion right here. So next I want to show you how you're growing your account. Look across the bottom here. You can see how you're growing your account. At the end of the first year here in December, you've grown your account to $18,000. Not too bad for a very small account. And let's see, I need to get some things out of the way here so I can scroll. And unfortunately, there are Skype messages coming in that are causing me a problem. All right. So let me scroll over here to the very end and just show you the result as we move out in time here. Again, notice as a small account, it's going to take you a little bit of time to get to the point where you can actually pay yourself. It's February of the second year when we begin to start to take some money out of our account. Too many traders want to take money out of their account at the very beginning part of the process. And if you do that, you never allow yourself to build the account to a point where it is sustainable and you build your business. Okay? So that's the other point I want to drive home. Notice how long it took. You got to have some patience when you start with a small account. Let's scroll out to the very end here and show you some numbers that are pretty powerful. At the end of 5 years, I just want to show you these results, and then that'll be it. At the end of 5 years, we have built an account up to $251,000 total, and pulled $40,000 out. And I'm sorry, we have $40,000 in the account, and we pulled out $213,000 over that 5-year time frame. Now, that's just with one market. Okay. What you can do with this after you've had some success is start to escalate this maybe in year 2 or 3 by adding additional markets. And so I haven't even included that in this particular example. Again, that's something you can play with once you download the worksheet. So Mark, those are the points that I wanted to get across on this very, very powerful pro forma financial projection.
Great, thanks, Brian. Yeah, that's awesome. And you know, it's good to hear firsthand somebody sort of following that along. I mean, it took them a little while, but those are fantastic results. And that's kind of what we're trying to stress, that when you have the smaller account, your biggest obstacle, challenge, hurdle, you just need to be more patient than most. If you're willing to be patient, you can see how you'll be able to succeed. The reason that we obviously focus so much on your risk per trade and not what's the maximum that you can trade, because too many people think the fastest route to get to, you know, the big money and the profits is to maximize position size. But reality is you're going to end up wiping out your account, drawing down, and you're not going to be around. You're not going to be trading in 6 months. And this is the reason for it, is when you start to get very large drawdowns, it becomes really difficult. You need crazy returns in order to get back. And when you're going for crazy returns, that means you're risking even more, and the odds are just not going to be with you. You're going to wipe yourself out. Probably a lot of people here, and I've done it too, have probably wiped out some accounts already, maybe even multiple times. And this is typically a reason for it. Because once you start getting above 15 to 20% drawdown, max drawdown, you know, worst possible stretches of time, it becomes a real challenge just to make enough money to be patient, to get back to just to zero. Most people just psychologically cannot do it. So that's why we really stress this quite a lot. And then the other thing is people just feel like, well, gosh, the only way that I'm going to build up, like Brian mentioned, is, you know, as soon as I can and I start to make a little bit of money, you know, I'm going to start taking money out. That's not what you want to do, because it's really important, especially when you're starting from a smaller base, that you allow yourself to scale up. You have to leave your funds in there. You have to leave your capital in there. You noticed on the spreadsheet that things really took off towards the end of the first year, into the second year, the third year. And like Brian mentioned, that's just focusing on one market. By that time, you're going to be trading other markets. You could be getting involved in swing trading or vice versa. So there's a lot more opportunities available to you. The breaking point where a lot of people just kind of fall apart is that first 6 months, people just tend to be extremely impatient and are shooting for the moon, and it just almost never works out. You have to be extremely lucky, let's just put it that way, for that to work out for you overall, right? And how difficult is it to scale once you get to the point where you have permission to add contracts? You just move over a little bit on the keyboard, right? From 1 to 2, 2 to 3. There's no other business in the world that you can double or triple your business just by changing the contract sizes. But the worst thing you can do is the fact that this is so easy. I mean, if you were in a physical business, to open a second and third store would take a lot of capital, a lot of time. There's some big barriers. It's great that trading doesn't have those big barriers, but it's also a big problem because too many people rush to 2, 3, 4 before they should or before they're ready. And unfortunately, not having those barriers leads to a lot of really undisciplined trading. Now, I won't go through this in detail because Troy's going to go to the charts and talk more specifically, but this is something that he's put together for us and is out there on the site as well. And it's really a small account formula, and it just kind of follows exactly what we're talking about, that 2 to 5% risk. There's the success guide that Troy will probably mention that's out in our owners club. That's very important. You have to commit to the trade plan. You have to execute the trade plan. And more than anything, you got to be disciplined and patient, right? There's sort of a common theme that we're sort of trying to say here. And it might seem obvious, but in 18 years of working with individual traders, it is really hard sometimes to convince people to be disciplined, patient, and to stick to the plans. So if you guys can find a way to do that, you'll be ahead of, trust me, 90 to 95% of the people that are out there. So Troy, let me hand it off to you so we can sort of take this theoretical actually to the charts and real markets so people can start to visualize how they can trade and how they can trade this way.
Great. Thank you, Mark. Thank you, Brian. So I'm going to focus mostly on markets that you could trade with a small account. I mean, small is obviously a relative term. The smallest accounts probably just would only be able to trade Forex, but there are some good futures markets that you can trade. If you've got a $5,000 to $10,000 account, let's face it, in the grand scheme of things, $5,000 to $10,000 is pretty small. But I guess it's just all relative. So let me just teach you the trend jumper first of all, and then we'll look at how powerful this could be. So I'll give you a quick lesson in the trend jumper in case you haven't seen it. Probably teach you 85% of it in the next few minutes. I want to call your attention to the green dotted line. The green dotted line is called the jump line. The jump line is a very powerful indicator. The entire strategy is built around it. Number one is it gives us near-term support and resistance levels from which to trade off of. We'll take a trade. It's kind of like jumping off of a trampoline. Okay, like if you look at this green trade here, you can see how there's some targets up above. You've got an entry. That little plus sign is an entry. If it's above the bar, that means you're going long. Notice how it's all above the green dotted line. That green dotted line is indicating that the momentum is up. Okay, so the jump line is going to give us the near-term support and resistance levels. It's also going to tell us when momentum shifts. Notice that the trade right before was a short trade. Everything was below that line, and then all of a sudden there's a long trade. Okay, so very powerful. Of course, trading happens at the right edge of the chart like this. So, for example, this happens in the real market. When you click on the bar, you get the entire trade laid out for you. Your entry, your stop, your targets. We've all heard plan your trade and trade your plan. Well, this one trade here is the entire plan. It's self-contained. Okay, not only that, but once we're in the trade, we have rules to follow as well. So with the trend jumper, we're typically trying to trade it with 2 positions. Okay, now if you have a small account, you might only be starting with a single position. It depends on your risk ratio, what Mark and Brian were just talking about, keeping it within that 2 to 3% range. All right, so the first position is going to come off right at that second dot. A second position, once you've grown your account, we would use to trail, once again, the jump line. The jump line is also a great trailing tool for us. So it serves a lot of purposes. Okay, now when we get to the first target, we're going to take our stop, which starts down here, and we're going to move it up just above our entry, and we're going to take the risk off the trade and cover the cost of our trade as well, cover the cost of our commission. And so you've got the entire plan. So as what happens with this trade, it triggers in, as you can see, and the stop holds, pushes higher. Notice that once it hits the first target, the stop is going to move from here up to here. Now we're on a risk-free trade. So the trend jumper wants to aggressively put you in a risk-free position as often as possible. And that's good, because all of a sudden now, you know, the worst case scenario is you break even. So when it hits the first target, if you're trading with a single position, you're done with the trade. If you've built it up to 2 positions, you're now trailing that second position. That one, in this case, stops out at that 1 tick range. Okay? Sometimes you're not going to hit the ball out of the park, but you could see back here, for example, how the trailer can make a lot of extra money for you, and it's good to trade both positions. But some of you might just want to trade to that first target, and then when you grow your account, double up and still exit your whole position at the first target. And you certainly have the option of doing that. It's a very flexible strategy. I also want to show you how the risk-reward ratio is always favorable with the trend jumper, and you could best see it when I put these lines here like this. You could see it doesn't matter what the symbol is, right? I mean, it's all relative. The space between your entry and your stop is how much you're risking, right? Whether it's 1 contract or 100 contracts. Notice that when you take off half your position, or your whole position, whatever, at this target, look at how much you're winning. So you're risking this smaller amount to make this larger amount. And that's what you want with a robust strategy. And of course, with the trailer, if it trails up, and you'll see this with some examples, that risk reward can really get bigger and bigger and bigger. As you see, some of these trailers can really pick up some strong and big gains. Okay, so, you know, I'll just show you today's session really quick, and then I'll move on and show you a few more examples. We start this at 9 a.m. I mean, it looks like we would have already been finished, but this is before our start time. All right, the trade room opens at 8:50, and we start trading heating oil right at 9 a.m. Eastern. And the first trade looked like it was doing pretty good. In fact, we had a member in the room saying, you know, what would you do if it's a short trade? Would you want to take it because it's already come down pretty far? And I'm like shrugging my shoulders. And I'm like, you know, who knows? Who knows if we don't know what's going to happen, right? And so he was rather comfortable that it got long first. But look what happens. That's the one that actually comes down and stops out for a loss. So it's counterintuitive sometimes. And in fact, it was the short trade that is where the money was made. And because of that nice risk-reward ratio, this one trade completely took care of the loss, and we were able to quit positive with our goals in hand on just these 2 trades for a winning session. Okay, so you know, it's not just dots on the chart. It's also the rules we follow. It's the trade plans that we follow. The money is not made on a trade winning or losing. The money is made when you're executing the trade that's part of a winning trade plan. The trade plan is the business part of trading. If you could just stay with the business of trading and execute your transactions, your trades, the wins and the losses, they all end up to growing your equity and growing your account over time. Brian showed you the average profit is what was able to grow that account, and inside of that average were a lot of winners and losers, but it's the trade plan itself that produced the positive average, and that's what you need with if you want to be successful, especially if you're growing a small account. So let's just look at a few more examples here. One of my favorites is soybean futures. Looks like a really messy chart, and in fact it is. This is a messy chart today, but it was one and done. I mean, we hit our goals. We hit our full target. We got our full winner, and we were finished, and we were able to avoid all the messy price action, again, because of real smart trade plan rules. And I'm going to show you how powerful this is. I'm going to segue over to a spreadsheet in a moment. But this was the trade today. It triggered in short. It doesn't matter what the symbol is. Everything I showed you in the last example is going to apply to this market and every other market I show you. It really doesn't matter. In this case, we're below the green dotted line. The setup is below the bar. We know we're going short. The whole trade is set out before us right here with your entry, your target, your stop. You have the option to go to a third target even. Okay, so it comes down, it hits the full target, and then it pops back up. It looks like it's actually, this is the trade here, comes down here, because we started at 8:30. This was before our start time. So we started at 8:30, it comes down, hit the target, and notice it spiked up and it got to within that one tick. And so that trade was, again, the trailer just didn't make that much, but it was a one and done session for 2.5 points, or 2.25 points actually, and I think it was an all new record profit level. We could check that in a moment, but there's nothing more to learn, and we were done in a matter of minutes. It was amazing how fast that was. The Dow E-mini, another great example. The NASDAQ E-mini, another great example. The Russell E-mini with the trend jumper, you can, the average risk per trade, or the average loss per trade, I should say, which is, I guess the average risk is $150. So, you know, depending on how big your account is, maybe you can trade it if you're aggressive with a $5,000 account, but a $7,500 account, you'd be pretty good. And in fact, in a moment, I'm going to show you an example of the Russells. But first, what I want to do is jump over to some Forex. If you're trading with a real small account, probably the best way to trade is with Forex, because with Forex you have a lot more flexibility in tuning your position size. Through the creative use of micros and minis, you can put the perfect position size on based on your risk ratio. So if you're risking 1% per trade, or 2%, or whatever it may be, you can use micros to get that lot size exactly where it should be. I like swing trading with small positions based on 1%, because then I could build a big move. One of the great advantages of trading Forex with end-of-day charts is that you can take advantage of huge moves in the market. Okay, but you have to put on small risk. And eventually you're going to be able to take profit at target 1, target 2, target 3, and then trail. So you could split it up into 4 different positions here, or you could just peel off, you know, as you go. But you can add to your position here, 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 here. This one move dating back to July is well over 1,000 pips. And you can do this with, I don't know, a dozen pairs, however many pairs you can follow. And best of all, it only takes you about 20 minutes a day. You can spend a few minutes a day with each pair, put on a trade, cancel a trade, manage a trade, look at the next pair, and that's it. And then walk away and remove yourself from the equation and let the power of time and a winning trade plan work for you. Now, one of the things on the list that Mark showed on his first slide at the very bottom, it said you needed a little patience. That's maybe the most important ingredient, because just think of when you're starting up a business, it takes time to ramp up. Just keep the image of a ramp in your mind. When you're starting a business, the beginning of the ramp, where it's barely beginning to incline, is very slow and gradual. It might not even begin to incline. It might just stay level, and it could even dip lower at first. Okay, so you have to have a lot of patience. Eventually, and you saw that with the spreadsheet, another way of imagining the ramping up is with the spreadsheet that Brian showed you. Eventually, it starts to curve up, and it starts curving up faster and faster and faster the longer you stay with it. And so patience is critical, and when you're using an end-of-day chart like this, it even takes longer, because each bar is an entire day. And you just have to be patient. Show you one more example. This is the CAD yen going the opposite direction. This is everything I just taught you and showed you. You click on the bar, it's above the bar. You got the nice risk-reward ratios, even to each target. I mean, look at how this is 1-to-1. That's about 1.5-to-1. That's about 2-to-1. You got the trailer. All these trades, you can build a really strong position. It's a great way to trade Forex. Now, you could trade Forex quicker. We've got some great 4-hour chart day trade plans. There's a 5-minute chart that we do in the trade room. In fact, someone said, you know, we only do this during the U.S. session because I'm usually sleeping during the European session. Someone said that they've been having a lot of success with the euro-yen during the European session, and I just wanted to point out this one trade that just happened. And this is even before the start time. You know, usually we're starting the European session around 2 a.m. Eastern Standard Time, and this is right around, you know, just after midnight, for 20 minutes to 1 a.m. And this trade triggered in, and you'll see the power of the trailer. You can see it, of course, hitting its targets. But look at the trailer. In this case, we're trailing an exponential moving average. But this is what I mean. The trend jumper is going to put you on the right side of the trade. Now, if you're sleeping through a trade like this, or if you're going to start at 2 a.m., which is the European start time, you can pick up the trade right here. All these trades are all valid setups. That's why the trend jumper is going to show additional setups, because sometimes we're not going to be able to grab it during a time we're not supposed to be trading it. But we're able to pick it up later with some of these other setups, and you just join in with that trade. And okay, so I think you kind of get the idea of how the trend jumper works. Every single trade I showed you works the same. You click on the bar, the whole trade's laid out before you. Then it's just a matter of following trade plans, following your rules, and of course following the Steps to Success guide, which will teach you how to build your own belief and your foundation as a trader so that you could build your business and allow it to ramp up the way it's supposed to. All right, so let's take a closer look at this plan here, the Euro Yen, and I want to show you something. This spreadsheet, and I'm going to click over to the data side first. This spreadsheet is a log of a lot of trades dating back to the beginning of the year. You know, there's a day or two missing here and there, but for the most part, they're all in there. And there's some wins and there's some losses. I mean, this was a really bad day even. And sometimes you're just going to get a day that isn't going to work, right? But this is what it ended up producing up until today, right? And so you got to think of each tree. Each trade is a tree in the forest, but your equity curve is your forest. Now, this isn't even taking into account growing your business and adding position size as your account grows. So I've done that here, and just starting with a $2,000 account, you would have added over 10% growth in 9 months with just a micro lot. Basically, it's 3 micro lots because this is using 3 positions. 30 cents a pip. That's it. So that's pretty good for making pennies that you can make over 10% in less than a year. Careers are built on Wall Street if you can do 10% a year, right? But look what happens when you put on 1.5, let's see, what's the risk? 1%, I think. Let me just double check. We're putting on 1% per position, so a total of 3% risk per trade, right? Starting with a $2,000 account, that's 3 micros, all right? Look what your account would have grown to. You would have turned $2,000 into nearly $16,000 in 9 months. The exact same trades. This is how you grow a small account and turn it into a sizable account. What do you think is going to happen in the second year? The ramp is going to speed up, isn't it? So I only got a couple minutes left. I'll show you another quick example. This is soybeans. This is putting on a similar risk profile. Starting with a $10,000 account, it would have grown to $25,000 if you only traded 2 contracts and never added to your position. If you added to your position as your account grew, your $10,000 starting account would have already grown to $56,000 in 9 months. You know, what's that? 560% return in 9 months, and you would have grown it up to 8 contracts per position. Okay, this is the power of growing a small account. Now, $10,000, that's a small account too. It's just relative, right? So it just depends on where you're starting, but you can get it done. One last example I'll show you really quick is on the PTU Trend Jumper blog. I've started this experiment, and you can get to it by going to ptutrendjumper.com. But if you click on this tab, it's the running Russell results, and I started this at the beginning of September. And this is a page that I'm going to continually update each week. And it says we're going to start with $5,000 in one position, and then we're going to take out trade costs. It's all explained right in this text here. and then we're going to just let you know what the trades were, what the net result was, and where we're at the end of each week. Okay, so we've already turned what would have been $5,000 starting into $5,560, so more than a 10% return already at the end of 3 weeks. And that's using the exact same idea that we're telling you about. $5,000, small account. Mark, of course I can talk about this forever, and I got a lot more examples, but I'll hand it back to you, and we can always look again at during the Q&A if need be.
Yeah, no, that's great. If there are any questions, like Troy mentioned, want to go back to a chart or take a look at one of these markets that are ideal for growing your accounts, more than happy to do that as well. So let me switch it back here real quick. I think the three of us, who have stepped up to the mic here, we're preaching a very similar theme. Maybe we're a little bit passionate about it, a little bit insistent, but you probably should, you're probably hearing some very common threads through all of this, and I think we're all sort of saying you got to be patient in the beginning, you got to pick the right market, you need to use smart risk, and then use the system that is in the Premier Trader University. I mean, that's what you want to go ahead and build everything off of. That's really the key, and like we mentioned here, we definitely do our best every which way to guide you through every step. So let me take you through the university, how this works, what the program entails, what we've kind of put into this. Like I mentioned, the class is getting close to being full at this point. So if you've been on the fence or been thinking about it, you definitely want to start to make the decision to get yourself enrolled. If you're new to this, then this will be some newer information as well. But we'll kind of go through this, and we call it the Premier Trader University because we have developed the curriculum so it works like going to college. The difference is you don't have to spend 4 years, or probably in some cases out there 5 or 6 years or longer. We take you through the prerequisites, the undergraduate and the graduate level, and we do this very, very quick. I mean, all of this will happen within the next 30 days for all of you. Let me break it down for you just into each individual component. The prerequisite, when you enroll, the first thing you'll do is you'll start to go through the self-paced home study portion. This you'll have access to right away. This is very important because this kind of builds the foundation, so when you attend the live classes, and when I say live classes, people sometimes start to panic that they're going to have to fly to California, Texas, Canada, Florida, UK, wherever one of the coaches are, the coaching team is, and that's not the case, so live in the comfort of your home or office. But we want you to be really prepared and understand all of the core concepts that will make the live training that much better for everybody. And we cover everything you see on the screen plus a lot more, but there's some core things that are very critical that you understand, from platform choice, broker, the style of trading you're going to go for, knowing going in probably what market you're going to start with, getting rid of most of your bad habits when it comes to way too much technical analysis. People have way too many indicators and way too many things that kind of cross in the night and confuse them. We try to strip that all down really to price movement and following our trend jumper and trend trader indicators. And then we really do like to focus on risk and trade psychology. As you can see, several of our webinars we've done in this series have focused more on those type of topics than anything else, because that's a big place that people really do get tripped up. The next thing is day one of really the live training is all about training you on the core trend jumper system. I think you can see what Troy showed you. We have made this and programmed this to be amazingly visual. Visual trading is by far the best way, and also having trading that is not highly subjective and open to lots of interpretation, that gets people into trouble. There really is no interpretation. What a buy setup is, what a sell setup is, what the entry price is, what the target is, and what your stop is on every single trade you ever take. Now, I know in the audience here I've got some people who already own the Trend Jumper standalone system. So day one for you will be some review. The neat thing about day one, I think, is that this gets taught live. So you actually get Troy, the author, and the coaching team coming in to teach the strategy rather than you learning it on recorded videos and sort of doing it yourself. It's really kind of nice to be able to have that back and forth and the interactivity. And I think people actually master the system much quicker in that environment. So you really get the benefit of that, and you get everything we offer with the Trend Jumper standalone. So all the trade plans, the software, the indicators, everything that you need to start trading every single market we've discussed here today, and then of course the markets you're going to want to trade as your accounts continue to grow. Now we add some things that you don't typically get with standalone Trend Jumper. Number one, we give everybody lifetime unlimited live training classes that we hold 4 times a week in the US, 2 times a week during European hours, and this is what we consider our VIP level, because normally it's 2 times a week that you get access. We bump you up to the full VIP, and everything is rolled in and included, no additional charge. Plus any of the trade plans that we add on a regular basis, or if we improve trade plans, those are all included inside the Owners Club, and you'll have access forever, so you never have to worry about whether you have everything or you don't have everything. You're always going to have access to everything that you need. I mentioned it's taught in like this type of webinar environment, but it's actually better in a way because it's in an application called Omnovia. So it's two-way, meaning it's fully interactive. You see the other students, you know their names, you see the coaches, everybody sees everybody else's comments, questions. So it really becomes an experience for everybody over the days that we do this. It's really turned, it's probably exceeded our expectations when we first designed the university. So now you move on to day 2, and day 2 is brand new for everybody who's here, because even if you already have the Trend Jumper core, you don't have what's about to happen in day 2. And I realize if you're just starting with Trend Jumper during the university, you're not going to be completely prepared for everything we teach you on day 2 and 3. And that's okay, because what really happens with this, everything gets archived, everything gets saved, and you'll be able to go back to this and continue to improve yourself as a trader. I mean, I've been doing net picks for 18, 19 years. I'm not done trying to improve as a trader. None of us are at 100% winners. None of us will ever be at 100% winners. So I always like to know that, hey, I can continue to improve. And that's exactly what's going to happen on day 2. So those of you having success with the Trend Jumper core are going to love what happens on day 2. So everything you see here, I won't go into all the details on this. We've gone into more details in some of the other webinars, the replays, which you guys can see, you get emailed about and have access to. The biggest thing is really the Pro Plus software. So if you're brand new to us, you're going to go right to the Pro Plus software, and you're going to be very happy that that's the case. If you have Trend Jumper already, we're going to upgrade everybody to the Pro Plus suite. And it really does everything that we were tracking maybe manually, maybe some stuff in our heads through memory. You don't have to do any of that anymore, because it literally will track everything. It's kind of an intelligent version of the software. It knows what happened before. It knows what happened in the prior trade, where we in the past had to kind of keep track of that a little bit for the software. So there's probably 5 times the amount of lines of code in this that Will's put together for us, but really everything that Troy dreamed up is in this software. What this means ultimately, I mean, I could talk about features and power and all this, but what I find that this means is it eliminates mistakes, okay? It reduces the possibility that you'll be doing something wrong to basically nothing. There's no reason that you should miss any trades or miss any trail stop or miss any reversals, any add-on trades, because it's all here for you. Another big thing that we introduced to you on day 2 is the Trade Assist automation. And yes, this does mean that you can automate, and I like to say semi-automate, because we're not big fans of 100% automation, but we'll go through it during the training. But there's definitely times that it is needed to turn something on and let it finish a trade, or if you have to walk away, etc. More importantly, it's an amazing way to test and develop trade plans. Or perhaps you don't think the starting time that we use is ideal. Maybe you know something about the market that we haven't looked at. With the Trade Assist, you can make subtle changes to the trade plans and find an answer whether or not that is a smart change or not in a few seconds to a couple minutes, which probably would take you 8 to 12 hours in a full manual test. So it's amazingly powerful. You'll have access to that, training on that, and that's another big thing that we open up to you and provide to you on day 2. All right, day 3 is all about kind of that master's level, right? I mean, I never got a master's in college, but you know, the people that I knew who did, obviously they were going for the top level academic pursuit. And in this case, you will get to a point. You know, Brian was mentioning the person who started in the beginning of the year at a certain size and is up to trading 3 markets and has made the 70,000, and I know the 3 markets that they're in. Eventually that person too, you know, they want to trade other people's money. You're going to want to have more and more capabilities, right? You're going to want to have the opportunity to add additional positions to filter out additional trades. So this is what Troy teaches you in day 3, and this is where we used to do like our advanced boot camp and that sort of thing. We've incorporated all of that into what's going to happen here in day 3. So this is really a great, very much of a crash course. But trust me, we've done this multiple times now. People, you don't get too overwhelmed because the way that we teach it and knowing you can always go back to it. And then I'll also be teaching a workshop on how I automate my trading with the PTU and the trend jumper. We'll talk about what the trend trader strategy, we haven't covered it all today. How I develop trade plans, how I avoid over curve fitting, over optimizing, because we have to build plans on the past. I mean, that's just the way it goes. So there's no such thing as not being able to have any curve fitting. People say, don't curve fit, you're going to over optimize. Well, that's all we have to base anything on. But there are ways to really get yourself into trouble if you over optimize or use too much of curve fitting. And I show you how I do it, how I always know go forward, what's a reliable result and what's not. And this is why training is so critical. Just go to the highlighted yellow here. This is taking mechanical results and then adding the training you get in the university. And this is when we looked at a subset of, if it was a few weeks of time, the bump that we had. And this is, this will vary. It's not always going to be a 168% bump on the Russell E-mini, nor will it always be 4% on natural gas. The idea here is you will always be a better trader the more education that you have, the more knowledge that you pull in. You will always be able to beat the mechanical side of it if you understand a deeper dive of what's happening with the strategy. And that's a lot of what we really pride ourselves on in the university. Another neat part of the 3 days is we'll have a presentation on how you can get involved in being a funded trader. Now, this might be particularly interesting for those of you with the smaller accounts today, because this gives you an opportunity to be funded and trade with other people's money. Now, but nobody's going to step up, right? And just today write you a check and say, hey, go for it, right? They're going to say, prove to me that you can trade profitably, that you can trade with controlled risk, controlled drawdown, you have discipline. Well, the neat thing is you're going to have multiple trade plans that will qualify for exactly that, and then you just need to go out the way we show you and execute upon those trade plans. And that's the real neat thing, because probably right now most of you don't have this opportunity. You don't have the systems or the training to be able to pull this off, to be able to attract capital like this. You will have that opportunity if you go through a program like this, follow our systems, and of course you're going to have to stay disciplined and follow it. All that's included during the university. I won't go over testimonials. We had a bunch in the beginning. If you came a little bit early, we have, I don't know how many now, of, on the trend jumper, the PTU, we have hundreds. And it's always from the people who put it to work, who put in the effort, that succeed. So if that somewhat describes you, then there's no reason in the world that you won't be doing the same thing, writing us a testimonial, a case study, etc., and having those kind of results. The way this is going to work, we're getting down to it. We started doing these webinars a couple weeks ago. The neat thing is we're just a little bit over a week away from starting the 3-day, October 1st, 2nd, and 3rd. So when you enroll today, you'll start with the prerequisites right away. No rush. You don't have to do them all tonight. You got plenty of time. Take it easy. Don't worry. No panic. It's not like it's next Monday. But we would like you to start to go through that. And then we'll get you, information and get you ready for day 1, day 2, day 3. These tend to be during U.S. market hours. If that's great for you, perfect. If you miss some of it, it's fine. We will record. We will archive. I'm just going to encourage everybody to attend as much as you can live. You're always going to get more out of it if you can attend live. So recap of what you're getting. Don't worry about the prices because you're not going to pay those prices, but we have to set a value for us to be able to determine what we should charge overall for university enrollment. The home study, the multi-day teaching, the undergraduate, the graduate, the master's, the amazing software that we've talked about almost kind of briefly today, the Lifetime Owners Club, the upgrade to the VIP, right? Everything archived, the Trade Assist software as well, the roadmap to trading other people's money. It's really an amazing value, but you're going to save quite a bit over that. So no heart attacks. I realize you have small accounts. The last thing you need to see is something at $18,976. I realize that, so don't worry. We do have a 100% satisfaction guarantee, by the way. I'm not aware of any other university/academy training like this that offers any kind of money-back guarantee. There's a lot of other programs out there that run $10,000 to $15,000 to $20,000 by the time you finish with them, and I don't know if I've ever seen any of them actually offer up this type of guarantee. Maybe there's a reason for that, but we have tremendous faith in what we do and how we teach. You do need to do something. You do need to get started. You can see on the screen what you need to do. It's pretty basic. You just need to go through the motions, right? So go attend the training, watch it on a recording if that's not good, install the indicators, take some demo trades. They don't have to be live in the market. Just make some effort. If you make some effort, you will never want to give it back, because when you give it back, it doesn't work. Nobody wants to give it back who has made the effort. So that's the key. All right. But if for whatever reason, everything we're saying today turns out not to be, as we're talking about it, I mean, after, since 1996, it shouldn't be a problem, but we realize we want to make sure you guys feel like your risk is covered, because it's an investment for sure. So let's talk about this, and then I want to maybe talk a little bit about what might be best if you are on a smaller account. Okay, if you're brand new to NetPicks, don't everything for life is $39.97, but you may want to focus in on the payment plan, because you can start at $9.99 and just do a 4-pay, spread it out, make it a little bit easier on yourself. If you already own Trend Jumper, I do not want to ask you to pay for Trend Jumper again in the university, because day one is review. All right, so we're going to take $1,000 off and basically rebate you back that, so you don't have to feel like you're double paying for anything. And you may want to focus on the 4-pay, and you can start at $749. Now, if you own anything that we have produced over the years, whether it's Ultimate Swing Trader, Keltner Bells, 7 Summits Trader, you can use the checkout code 500 off, and if you do a full pay, it'll take an additional $500 off. So it'll drop you down to $34.97, or it'll drop you down to $24.97. I'm allowing you basically to double dip. If you own the Trend Jumper, I'll give you the family discount, and I'll give you the Trend Jumper discount, and we'll bump it down to $24.97. But a lot of you here, given account sizes, you may want to focus more on the 4-pays. I realize that. If it's better for you to do the one-time, do that. You do save money, so that may ultimately be the best investment for you. I realize that this is an investment for all of you. And it's not, this isn't $97, but you're never going to be successful pursuing things that way. I'm sure you already know that. This is the real deal in a professional level course and professional level training. We've got 4 seats left of the 40 original seats that we started with. The enrollment link is netpicks.com/enroll. That's where you'll be able to decide, hey, do I want a full pay? Do I want to do the payment plan? Am I going to use the 500 off and do the full pay but get the discount? You'll have those choices. Do what's best for you. If you've been with us and if you've already invested in the Trend Jumper, then obviously, we've taken off quite a bit to try to make this as, attainable for as many of you as possible. But we also, of course, have the guarantee as well. Now, I know you've probably been asking questions as we've moved through this, so this would be a good time to ask some additional questions. I'll go through a couple final things as well, but get those final questions queued up here so we can answer those for you. Brian also put into the chat area the link, contact phone number, all that good stuff, and I'll put that on the screen in a moment. If you want to work with TradeStation, that's the platform that we show you. We don't get any kind of compensation from them. We just think it's a great platform. And they have offered all of the PTU enrollees the opportunity to reimburse yourself, basically the entire tuition that you invest here today. And they do that through a commission rebate program. So we can get you all the information on that. We've had lots of people over time get enrolled in this. Very, very popular. You don't have to work on the TradeStation platform. If you want to work on, let's say, NinjaTrader, that's a great platform as well, with some excellent choices, low commissions. So those are definitely things you can do. But we definitely have a special deal with TradeStation, and we know you guys will be very happy if you go that direction. Let me tell you a couple things here. Most of you have gone about learning how to trade and be successful the hard way. This is exactly the way that I did it. I bought a whole bunch of indicators. I bought a lot of systems. Most of those, there was no support, no training. I saw some screenshots. It looked good. Tried it out. It didn't work. Then I went ahead and I tested and tested and tested. Thought I was onto something. Didn't realize that I was probably over curve fitting and over optimizing. I then traded it in real time. Didn't work at all. I would, sometimes lose a little, get really lucky for a while, then lose a bunch, repeat the cycle over and over. Eventually, you end up quitting. My story is a little different. I got lucky in the beginning of my trading career, way, way, way back, and literally probably took 10 years in between to get back to that point. That took me until about the mid-90s. when we, and I started Nepix about a year and a half later, knowing that, God, there's got to be a lot of people who have gone through the same thing as me, who wants to do this for 10 years like I did. I'm just super stubborn, as a lot of people know. So I would suggest you do it a different way, and that's really the Premier Trader University way. You're already going to get the proven system with this. You're going to get great training. You're going to get real-time, look over our shoulder training, right? Tick for tick, nothing that's cherry-picked. You can start with a smaller account. You can compound and scale. There's been over 1,000 traders coming through the Trend Jumper and PTU strategies. You're not the first. You're not having to set new standards or new ground. It's already been done, already been proven. This is going to ultimately be the better way for most of you. And I'm hoping that I'm reaching people through these webinars. I know we are, because we're getting people to enroll. We're getting a lot of enthusiasm. So this is a great time to open it up to final questions, I think. And I've got some contact stuff on the screen. So let me just pull open the box here, and we can kind of work through these. Troy, anything, since I've been rattling on for about 10 minutes, that you want to add to that mix while I look at the questions?
Yeah, a few things. One is that we've got the live trade room, and there's just no better way to learn this than to see it live every day with either myself or Will or Ron moderating the room, answering questions. We're trading this live. You're learning it as you go. It's really important. And we also take requests. We'll look at different charts. We're typically trading the same markets every day. The room opens at 8:50 a.m. Eastern Standard Time, and PTU members get the VIP treatment, which is 4 days a week in the live trade room, and then 2 days a week also during the European session. So I wanted to bring that up. Another thing is that Wendy has asked to see a demonstration of a stock. So Mark, if you want to hand that over whenever you are ready, I can show a stock example.
Yeah, sure. I'll hand it off right now. I'll go through a couple more questions real quick. I know there was a question on MetaTrader. Maybe that was answered. MetaTrader we do support with the standalone trend jumper, but because things are much more advanced with the Pro Plus software, it's only going to be able to work just because of the level of, the type of software on TradeStation and NinjaTrader. Don't make that be something that holds you back, because trust me, once you make the change in the migration, you're going to be really, really happy. I haven't met anybody who has not been happy for making the change to TradeStation or Ninja. I mean, MetaTrader is a great way to start. It's free. We get all that. That's why we make Trend Jumper standalone supported on that. But ultimately, if I can get you guys to change and almost force the change as a result of you enrolling, you're going to thank us for making that switch. Go ahead, Troy. Show us, tell us what we're looking at.
Okay, now I chose this one because the theme of this is, small trade account, and this is SLV, which is the ETF for silver. And you'll notice that the stock price is basically $20 or less, right? So I wanted to show this because, I'm showing the automation feature. We didn't talk about that at all, Mark, but basically, let's just say you get this set up right here. You click on the bar. You know it's below the bar. You're going short. You could either sell the stock outright, or you can buy a put option. We kind of show you which ones you want to look for, the kind of options that you're going to be interested in trading. And the strategy works exactly the same way, and you could scale out some of it at target 1, some of it at target 2. There's a target 3 further down. You could trail the green dotted line or another line that we specify in the trade plan. You can see here on the way up the same type of thing. These, the targets are pretty accurate, but what we're doing basically is using the setup on the stock chart and then buying the appropriate option that's right at or around slightly in the money of the entry price. That's all you got to do. And then you just trade it. And this could be done in a retirement account. And just to give you an idea of this is such a great market to trade, low cost, each option is very low cost on SLV, $100 or $200, sometimes less. But this is per share, right? It's made $111 per share. So if you only traded one share, right? Obviously, we're trading more, 100 shares or whatever, dating all the way back to 2006. And you can see the average profit per trade, all wins and losses, $1.32 per share. That's pretty powerful. Look at the profit factors over 4. And, it's never lost more than 2 trades in a row. since 2006. That's pretty unusual. But, this is one of many. Any other stock that is on there is going to work the same way. There's nothing new to learn. It's the same strategy. Back to you, Mark.
Great, thank you. Yeah, Wendy was saying, hey, how about Tesla? I don't know if Tesla fits small account trading, but I imagine with the volatility that something like Tesla has, it could theoretically be an effective one to trade, but I'm not
Alibaba
sure.
had some great day trading on the first 2 or 3 days.
Right. Now, that's the thing to point out, though. We don't force you to trade any one market. It's not like your license isn't going to work on anything you want to trade. You can, and realize that as long as there's momentum, volume, and some volatility, what we teach you here is going to be pretty darn universal. Just don't force it to work on something that doesn't have momentum and volatility. Then, of course, why would you even do that? Because there's always so many different markets that are on the move. All right, so I'm going to do one final call out for any final questions that anybody might have. If we missed anything up top, I think you guys did a really good job of answering as we went, but if we did miss something, it might be a good time to re-enter that overall. And a couple quick things. On the enrollment links on the screen, if you wanted to talk directly with us, Brian put into the chat area, you can call him directly. We really try to emphasize this. Again, we try to be different than what's out there typically. You actually get to talk to the people that trade, the people that have developed the systems, support the systems. We don't have hired hands and salespeople and all this type of thing. It's not how we're built. So across the board, when you interact with us, you're interacting with us, and that's kind of been like that since day one. And a big reason for that is, the whole coaching team is made up of, existing customers. So we really, feel that we can relate to all of you.
Hey, Mark, if you want to hand this back to me one last time, I just did something very random for Wendy, and I just want to show this. I copied the Dowie Mini 5-minute plan that is one of the trade plans on the Owners Club, and I changed the symbol to Tesla. So copy and paste, right? And these are all the trades that just are on the end of the chart just from copying and pasting, and you could already see the winner here, the winner there, the no trade here, the winner here. This one here ultimately works its way up to the middle target too, misses it by maybe a penny. But, I mean, I've never looked at this ever. It's just a random chart, and it's the exact same thing working on any old symbol, any old time frame. Not saying you should trade it like that, but then you look at this and you take what we teach you in the training, and you learn how to apply this and create a trade plan that you would be able to trade. So I just wanted to point that out.
Yeah, that's great. Perfect example, right? Where there's movement, there's opportunity for sure. Question here: if I trade Forex on a $2,500 account, will I be able to learn and do day trading within 30 days? There's just no reason that you would not be able to learn this in 30 days. I can tell you the core trend jumper system, when we did a survey of the installed owners, the average time that people felt that they needed to get up and running and learn the rules, I'm not saying be the perfect master of everything, but it was about a week. So 30 days, plenty of time to get up and running, to start to practice. And we do like you to practice first. We prefer it. But if you follow kind of what we sort of take you through, no reason at all that you wouldn't be able to do that. And then, of course, it's important if you're talking about day trading that you focus in on the Forex, really of the the pair or two that are going to work, and don't try to force it to work on pairs that are just not going to be productive. Patrick, yes, let me give you the phone number. In your case, I understand. So if you're ready, it's you can call and talk to Brian, 440-628-5035. So that was 440-628-5035 if you'd like to call Brian directly. Let me see what else. Yep, no problem on answering the question of the 2,500. All right, I think that's about it. On Thursday, we do have another webinar. Let me see if I've got the sign-up page. And if you're interested specifically in Forex and Forex swing trading, you may want to attend on that. We're going to speak really 100% on swing trading Forex. That's what it's all about. Trading Forex in 15 minutes per day. It's not day trading. That's swing trading. and we're really going to focus in on every pair but the Euro US dollar, and there's a reason for that. So that's going to be the conversation, the training, the discussion, the webinar on Thursday. So by all means, feel free to join us for that as well and get some of the education out of that presentation. So with that, I'm going to go ahead and wrap it up here. I'll thank Brian and Troy and Ron and Will. Also to all of you, really do appreciate everybody attending. Congrats to those of you who have enrolled. If you've got some lingering questions, that's fine too. Please go ahead and just give us a call or shoot us an email, whatever the case may be. What time is the Thursday webinar? That's going to be at noon New York time, so 9 a.m. Pacific, 4 p.m. GMT. So that's the Thursday webinar, and once you go to that screen, it'll give you the time as well when you enroll. All right, thanks everybody. Take care.